Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Tuesday, August 12th. Moving next to NYMEX oil, and here we see a change of trend today, a candle with a black body and making a lower high and a lower low, and that follows strong resistance at the 98 level and at the or near the Tenkan-sen indicator, and that's in line with the market being bearish in all three timeframes, trading below each of the Ichimoku indicators, and the Chica span confirming that price activity. So the sellers are attempting to build some downside momentum following this weak rally, and that's what we see in a market that's trending down. We get this step-like action, downtrending price action congestion, downtrending price action congestion, and what we're looking for here is a breakout down below this area. So today we've seen the market finding support around that 97 level, and here we saw the previous support coming in just below there and at that level. So we're looking for a break of this swing low at roughly about the 96.50 area. If we see a bearish close down below there, we could see this market testing down to 94.63. No solid support until we trade down to that area. Now looking at the Tenkan-sen, it's pointing down quite sharply, reflecting some solid downside momentum in this market and suggesting that the sellers are attempting to build here for a move. So a very important trading activity coming up over the next day. Now looking at the one standard deviation Bollinger Bands, and here we saw the breakout down below, the follow through, and what we tend to see is when we have very strong downtrending price action, the market trades down below that one standard deviation band and tends to retrace back towards it and finds resistance there, and then the sellers come back in. So there's a very good opportunity here for the sellers to continue the trend to the downside. One thing that worries is the width of the band here. It suggests that we have some decent volatility in the market, and we know that markets move from low volatility to high and back to low, so we could start to see a squeeze if the market does move back to within the bands here. And just looking at this triple divergence that we had a few days ago with the MACD histogram and price action, we have price action making a series of lower troughs, but the MACD histogram was making a higher trough and then just slightly equal trough, so suggesting that as the market was making these troughs, all was not well with the market. The momentum was actually not going with the market. The momentum was actually losing its strength, and what we expected to see was a decent rally here. What we've seen is a very meek rally, so it suggests here that the sellers are the stronger party here in the market, and what we're waiting for here following this candle is the sellers to give us some follow through and break it down below this swing low.